Traders, how you doing? And welcome back to the channel. In today's video, we're going to be talking about a lovely trade that I took in Swiss yen a couple of weeks ago, or maybe 2 weeks ago. A really big winner. Now, disclaimer, this doesn't happen often. This is really where my edge comes from, where you get those trades that just run and run and run and run, keep capturing more and more and more profit. So I'll be lucky to get maybe 4 or 5 of these a year. But thankfully, we got one of them in October. So let's go through it and see why it potentially works so well. So this was the setup that I sent to RTFX members in the RTFX Discord. If you are not a member of that and you want to try it for free, the link is down below. So this is the setup here. We had our significant level identified by this orange zone. We got our larger V reversal, heading back and tagging that area again. Coming down from that impulse, created a nice corrective back to roughly that 38.2. Now, I like trading the Swiss yen. The Swiss yen is actually one of my favorite pairs to trade. And one of the market characteristics about it, i.e., I think a lot of pairs have their individual personality. One of the personalities or characteristics of the Swiss yen is it likes its 38.2 Fibonacci level. So we corrected from this impulse, making this trend a bit healthier, back to that 38.2. And bullish pressure started to come in again. Pushed up to the area, tagged that area yet again. As a breakout trader on these higher time frames, the 4-hour and daily, the more tags of the area, while we increase in pressure into that area, the better for me. I feel they get less severe, the more knocks on the door we get, essentially. So we came back up, tagged that area again, and created my favorite complex ABC corrective. Now, not only did we get that ABC, we got that ABC on that 20 period, or C wave on that 20 period. A bit of volume coming in on that C wave, which again is something that I like to see. Buyers starting to come in, increasing pressure into this area. Now, the final part of which I liked about Swiss yen is we got a slight accumulation period just prior to that area. So you can see here, 4, 8, 12, 16 bars. If I zoom in here, 16 bars of accumulation. Again, letting that 20 period catch up, really squeezing that price into that area just prior to a break. So before we took our trade on the breakout zone here and our stop loss underneath the previous swing. And so we put our breakout order here with stop loss underneath the previous swing. Now, not only that, now with my trades, not only do I need the setup, but I also need higher time frame confluence. And this is where I think this Swiss yen trade really took off. So if we come here, firstly, to the daily chart, our trade was placed at this area here. Now, notice we're coming from a slight corrective structure, I would consider, from this impulse to the upside. So for me, right off the bat, that's quite a good sign, because potentially, we don't know what happened in the future, remember, we don't know this happened. Potentially, that was a good sign for upward movement, if indeed it did break out of that structure. Now, not only that, just prior to us taking the trade, which again was here, we had a slight head and shoulders on this daily chart. Not only that, we had an outside bullish engulfer on that 20 period just before we took the trade or was entered into the trade. So again, adding all these confluences with the daily chart, with that bullish sign here, with that bullish engulfer, made it for me quite healthy and potential for that big move to the upside. If we move out to the weekly and we zoom out on the weekly, again, this is where we were when we took the trade. Now notice on this weekly chart, we've had an impulse, corrective, impulse, corrective, impulse. For me, we were in this third corrective stage. And within that corrective, it looked to me as we got an A, B, C. So we got an A, B, C. Now, C wave came on an outside bullish engulfer. So again, very simple chart patterns add a lot of confluence to your trade. So I was looking at this weekly and daily thinking, if we do break above this area, it could be in for a really good move. And that's exactly what we got. So remember, markets have a memory. Impulse, corrective, healthy trends. And we're just in that third one, getting in at the right time, using that higher time frame confluence of an ABC, knowing market structure, knowing a simple pattern such as an engulfer, using head and shoulders, daily outside bullish engulfer to add that higher time frame confluence. Now, we were actually triggered into this trade on this particular candle here. So we were triggered into the trade, and we had to wait for 12 hours of price action before we started to move into a little bit of profit, which is fine, no problem. You know, and actually, even though we were triggered in, this actually made it a little bit better for me because, we're getting that squeeze into the area. Sellers aren't taking control from this resistance zone, and then we eventually break through. It took 4, 8, 12 hours, and then we started to get our big move to the upside. Within my trade management, I have 2 orders. For every trade, I place 2 orders at 50%. And normally I take 1 order off at 1-to-1. The reason why I like that is because if we do end up failing, it becomes a break-even trade. So I didn't lose anything, I didn't win anything. However, the only difference is if I am in the market and I like price action, which I did at this point, I will take my 1-to-1 order out as long as I'm in the market. So if I'm sleeping or if I'm away from the charts, I'll keep that 1-to-1 in because I want to see price action. And on this particular bar, I believe our 1-to-1 was roughly here. So within this bar, I was in the market. So I took out my 1-to-1 because of the whole structure of the trade and thinking, right, it's moving really well now, I'm going to take it out. And that's what it did. It moved up, and I think I took my first TP, or I did take my TP at 2-to-1 RR. So at as a 2% risk, I had banked 2% on that trade so far. At that point in time, it was the next day, and I think I was moving away from the charts. So I just took some profit there, very happy with 2-to-1. Now, the second part of my trades management is letting winners run. So my second 50%, I always wait for the swings and then move my stop, with the idea being catching on to a very nice trend where we move our stop up, 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 up. Obviously easier in theory than it is in reality. However, with this trade, it was actually quite easy. Remember, this is a 4-hour chart, so it's actually taken 4, 8, 12, 16, 20, 24, 28 hours on this initial impulse. And then you've got another 2 days for your corrective. So you're sitting around just waiting for that corrective and worrying, is it going to come back and hit my stop loss, etc. You've just got to be patient and remember that trends just can't continue up and up and up. It has to correct. So I was waiting for that swing. We got that swing confirmed when we broke above these highs here. My stop was moved here, waiting for the next real swing. We had our impulse, again, a nice corrective and break through these highs. So I moved my stop loss here. And then since we had moved quite far, it looked as if for me, we were potentially losing momentum. So I was fine moving my stop here when we broke above. I was fine moving my stop here because I felt that this was potentially coming for a harder reset for continuation, which it could be right now. So I moved my stop here, I moved my stop here, and I got taken out on this particular candle. So this runner got me 3R alone. Remember, the first trade we took off at 2-to-1, so technically that was 2%. 2% position size is a 1R profit. Added onto this, it was actually slightly more than 3R, but if we include the swap, if we include the commission, it's basically bang on a 4R trade, which is an 8% gain. And again, this is where, this doesn't happen often, doesn't happen a lot throughout the year, but this is where my edge comes from. Normally, I might get one swing out of it, and then it comes down to hit my stop. But on these trades, like we saw in Swiss yen, the ones that really run and run, make a massive difference for me in my trading at the end of the year. Because if I get those 8 to 15% trades, maybe 3 to 5 times a year, it makes a massive difference in that ROI at the end of the year. Right, if you like that video and want to see more trade reviews, hit that like button. If you're not subscribed, help me get to 1,000 subs. Hit that subscribe button, notification bells on so you know when we upload a video. If you're interested in taking your trading to the next level, look at the links down below, rt-forex.com and RT Forex Discord. We give away a 50,000 FTMO challenge to one member every single month. A 7-day, no credit card, free trial. So hit the links down below if you're interested in that. If not, I'll see you in the next one. And remember, trade safe. Peace.